Welcome to RANsquawk's morning briefing for Wednesday, 28th of October 2009. Just gone through 9:30 now. So firstly, we'll just take a quick recap of some of the overnight news stories. Starting off with the US, with Treasury's Geithner saying initial recovery signs came quicker than expected. He spoke after the markets closed yesterday. Geithner said first stimulus is helping bring confidence back and that half the stimulus impact is still ahead for economy. The financial system is still broken and rules need fixing, but is in a much stronger shape than before, all ongoing. In regards to as well the political background of various regulation and rules the US are trying to push through at the moment. In particular, of note, the Senate said they're close to a deal to replace the home buyer tax credit, which we've already seen has had some repercussions in the feed through to some decent numbers on the housing market front. Elsewhere, US mortgage defaults ebbs in some hard-hit cities in Q3, but unemployment created new trouble spots as foreclosures set a record in the quarter, as according to the real estate data company Realty Track overnight. And also from the Journal, GMAC may get another $2.8 to $5.6 billion from the US in the form of preferred stock that may increase the government's stake in GMAC from its current 34% if converted into common equity. Elsewhere in geopolitical news, ongoing from yesterday, we have seen the FT report that Tehran told nuclear deal cannot be changed after Iran wanted so yesterday. In particular, the US will be ready to respond if Iran fails to make tangible steps soon to meet its commitments over its nuclear program, with General in the US, James Jones, saying that all options are on the table. Also this morning, we've just seen released around half an hour ago the ECB publishing their latest lending report, saying that net credit tightening still substantial, but no reversal yet. Banks expect to tighten credit to households less in Q4 though. The bank tightened credit standards less aggressively as well in Q3. Take a look in terms of corporates today. Quite a few major stocks earnings across the UK and Europe. In the FTSE, BG Group posted Q3 earnings for the period at 474 million, above the expected 444. Elsewhere in France, ArcelorMittal Q3 net of 903 million, above the expected 58. Santander had a Q3 net of 2.22 billion, above the expected 2.2. However, we have seen technology stocks have been starkly underperforming across Eurozone, as after SAP in Germany came out with a Q3 net income below expectations at 435 million. They also cut their outlook for 2009 software and related services sales. So again, it has weighed on techs across the board. Elsewhere as well, financials still in the spotlight. ING seeing a third session of pretty hefty declines, down to around 4% again, following a fall of as much as 14% in yesterday's session. Still ongoing on the back of that announcement earlier in the week on restructuring and capital raising. And also Moody's downgraded the company's ratings to A2 from A1, outlook developing after market close yesterday. Elsewhere, as the dollar index in general risk-averse trade, dollar index has eased back into positive territory and is now positive on the session. That in turn has weighed on the energy complex, which has ticked lower in tandem with equities. We've seen WTI move back below $79, with European stock markets down around 1% or so. So oil and gas as well in the sector basis falling down the ladder in the laggards. Elsewhere in currencies, euro-dollar as well being weighed upon in the last half an hour or so. Some analysts looking at the Bank of Ireland coming under a bit of selling pressure this morning, and that is weighing on the euro. Taking a look then as well from what we have seen in the German state CPIs, they've all shown a slight advance in terms of the rate of inflation in Germany, but still relatively negative to flat for most of the major states. We'll be looking out for Bavaria to report at 11 o'clock alongside the weekly EBA mortgage apps. 12:30 we'll get the US durable goods report. 1 o'clock the Norwegian rate decision. A lot of attention will be given to that, as analysts are expecting them to hike rates by 25 basis points today in Norway to bring them to 1.5%. 2 o'clock London sees new home sales, that'll be 9 in Chicago, and then we'll have after that the DOE all inventory weekly numbers. Later on in the evening as well, after the market closed, the Reserve Bank of New Zealand, they're due to have their interest rate decision, although most analysts are looking for an on-hold decision, rates at 2.5%. We're keeping a close eye on their language in regards to their own currency. And elsewhere, come at the top of the hour, we'll have a German €5 billion bubble auction, reverse auction for the Bank of England today. That's also underpinning some of the rise in gilt futures this morning. They're targeting 2013 to 2019 maturities today. And then we'll have $41 billion 5-year notes from the US at 5 o'clock London, midday in Chicago.